What is the market doing? Why did we see such a dramatic pullback here on the S&P 500 if the cases are only getting worse and lockdowns are extending? I want to show you guys the irrational behavior right now going on in the market based off of the coronavirus and how you can take advantage of it. All right, here, let's roll the intro. All right, traders, welcome back to the Top Trader channel. You guys are going to love this particular video because I basically broke down for you exactly why we have seen such a dramatic price move since March 24th. Okay, March 24th, you guys can take a look. Right here, we saw this dramatic, enormous candle to the upside, and we've seen a pretty decently well-sustained move since then. Okay, we're moving over into April 16th. It's April 16th today. US session has not started up quite yet. It's 8:25 and we're just waiting. We're waiting for the market to make a move. But the most important thing we need to factor in right now is exactly why the market has moved in the capacity it has. Like, what has brought the market up from the S&P 500, the 2,300 level, all the way up to knocking on the $2,900 level. All right, so here at the Top Trader channel, we like to talk about the fundamentals. We like to price in. We like to understand exactly why the market is moving, so that way we can make very well-informed decisions. We look at price, all right, which is technical analysis, but we need to know what's happening on the back end fundamentals. So if you guys enjoy looking at fundamental analysis, make sure you subscribe so that way you're notified whenever we push out more content. Okay, so this is some research that we were doing inside of the recession room. Recession room is where we're playing all recession-based trading opportunities. The link to the free trial is inside of the description below. What I have been taking a look at here is something you guys really want to pay attention to. All right, so I cleared my chart. Let me pull back out to the weekly just to show you guys the context in case you were new here to the channel. All right, so let's zero in a bit. We've seen a massive sell side, seemingly capitulation of markets. We were trading higher and higher on declining volume. This was due to happen. Okay, this was due to happen. This is, again, something we have mentioned since October, where we feared that we would see markets capitulate massively because there weren't many market participants involved in the actual market itself. So if we put open a fib, this is the most important part here. The fib from the high here to the low, you guys will notice that we've seen a 50% retracement so far here in markets. Okay, that's quite a substantial retracement. And right now we are holding that price level pretty well. All right, we obviously, it's Thursday, but by Friday, who knows, you might get a lull in volatility. Anything can happen though, in regards to fundamentals. But at the moment, we may close somewhere around these highs. Now, the most important thing we need to factor in though is why did we get such a tremendous up move? Okay, we know that markets sold off dramatically because of the coronavirus, but has things gotten 50% better, right? It's not really rational. The market is acting very, very strange right now. So what we need to do then is we need to price in exactly why the market has ran, starting from this date here, March 24th. All right, that was quite some time ago. And if you guys don't exactly remember what was going on in markets, I'm going to show you. Okay, so let's here go to Google. I want to show you guys exactly how I do research on these things. It'll help you and bring you into some context on how you can do fundamental research on your own. What we want to do though is we want to go straight to either Googling the S&P 500, or you can Google coronavirus. You're going to have to, do a little bit of trial and error, but it's going to give you insights on exactly what was happening during that time. All right, so here, let's stick with S&P 500 for now. And let's head over to March 23rd, and let's head over from March 23rd all the way over here to, let's say, March 25th. Okay, so we're putting that date, okay, the 24th, right there within that confine. Let's see what we got. All right, so boom, we get some pretty interesting information. Now, I've already done this, so I know what it says, but you guys may be slightly surprised. Take a look here, okay? U.S. stock S&P rallies for second day as investors await $2 trillion aid deal. Okay, aid package. Guys, the entire S&P, this move that you guys are seeing right here, most of this buy-side move is because the stimulus bill here in the U.S. was passed on the 25th. There were rumors going around the day before that the stimulus bill was going to get passed, so you had this massive resurgence of capital coming back into the marketplace. Now, let's really think about that, though. Why does the stimulus bill incite people to be 10 times, billions of dollars times more optimistic about what's going to happen in the market? Me personally, I think this is irrational. I think we were looking for something. I think market participants were looking for a reason to buy. Bulls that are sitting right now with cash in their freaking accounts that are just waiting for markets to have some type of positive relief. They said, okay, anything that we can do that is going to start this market to continue its buy side momentum, we're all in. People that have been fanatically, buying in the market this entire time, 10-year bull run, the market's great, everything's okay. We have no type of recession-based scenario coming through. The coronavirus, again, it's nothing too serious. At the end of the day, yes, it's a virus, but the economy itself, it's good. Those people are looking at all of this as a discount. There are many, many market participants. You could have watched CNBC throughout this entire sell side. Everyone was saying the same thing. Oh, this is going to be a great buying opportunity. We're so excited, right? You had those guys there. Well, they got in the market. They got in the market once that stimulus bill was passed. And you see, if we head over here, from all the way from March 24th, again, all the way up until around, let's say, the end of the month of 30th, you had that massive resurgence of capital come in, and that brought us to this 38.2% retracement here, okay? Now, we had a little bit of turbulence, right? You had a little bit of volatility. Obviously, people aren't going to just run all the way in for us to get a full 100% retracement. But at the end of the day, we can also calculate why markets started to slow down around that 38.2. Because once the stimulus news comes out, it's old news. Okay, the bill's passed. Now what is going to make us excited to buy into this market? Because nothing technically happened, right? If you think about it, yeah, the stimulus bill was passed, but at the end of the day, we didn't get any kind of real monetary velocity. We printed trillions of dollars, and we're now hoping that people are going to start spending that money in the economy. Is that going to happen? In my assumption, no. Okay, I know a decent amount of people that have gotten their stimulus checks. Those people are going to hold on to that money for a dear life or pay some of the late bills that they have. But they're not about to go out and start spending money in the economy. This is why we're probably going to have a second tranche, a third tranche, even a fourth tranche of stimulus coming out for the people here in the U.S. All right, so let's file down exactly what happened around the 26th, because there is something that happened. And notably, if we go right to the 31st, all the way down to the 1st, there was big news that came out April 1st and April 31st. Let's take a look. Now, what we'll have to Google at this point in time is coronavirus. Again, I've already done this for you, so when you're moving forward trying to price in data, you might have to, find your own keywords and things of that sort. But if we Google coronavirus, all right, and we go to that exact specified date there, let's go set our custom ranges. Let's hit off right on the 30th, and we'll go to the 2nd. All right, there was some interesting things that came out during that time. What came out during that time? Well, the U.S. first released those estimates of 100,000 to 250,000 potential deaths here in the U.S. That definitely scared some of those buy-side market participants. So what did you see happen? You saw a massive amount of sell side come into the marketplace. Look at all the articles here, right? So Trump warns of painful 2 weeks ahead. Coronavirus death toll may reach 100,000. Trump's alarming coronavirus message to America. All of that came in during that exact time. Okay, so again, people are now being nervous. So they're optimistic, stimulus bill. They're nervous again. Coronavirus death toll increases. The market is reacting. It's overreacting right now to anything and almost everything that comes out related to this. Okay, this exact same thing happened. I hope you guys remember back when the trade war deal was happening with the U.S. All right, here, let's take a look. Let's head over very quickly to TradingView. I want to show you guys some things regarding the trade war, and I want to show that to you actually on the New Zealand dollar and the Australian dollar, because that's when things were getting pretty heated. All right, so let's head over to the weekly time frame. And what you guys will notice is in the 2019, that was when the whole trade war crap was going on. 2019, really almost early 2019. So what you'll see, and I don't want to sit on this too long because we made a bunch of videos on the trade war back when it was happening. But what you guys will see is these ebb and flows here, right? You see massive sell side moves, but then you see massive run ups back into structure. Okay, and that, my friends, is not coincidental. During those times where you see these massive corrective moves to the upside, All these moments were scenarios where Trump at one point tweeted or spoke about, or there was optimism coming into the marketplace about, hey, it seems as if the trade war is about to end. And you can go and do the exact same type of research that I'm doing right now. You can see that eventually people are being swayed left and right. All right. But eventually, at some point, there wasn't that much of a reaction. It would take enormous data releases that were more factual for market participants to react off of trade war news. Okay, so that's exactly what we're going to see happen here in regards to the coronavirus scare and this whole coronavirus crisis. Right now, people are reacting if the stimulus bill gets passed. Right now, people are reacting if Trump says something about, hey, there's going to be a large death toll. Let's go to our last and final date, one that's going to be fairly impactful for you to take into account is here, April 6th. This massive buy side move. And again, we've somewhat been sustaining it, but what caused us to break the high here and run all the way up into that 50% retracement? So in this case, we have such a large day on the S&P 500. It probably makes sense for us to go to S&P 500, go to April 6th, and then try to figure out exactly what went on that particular day. All right, so we're just going to do the exact same thing here, set our custom ranges. Let's go to the 5th, and let's maybe hit off onto the 7th there, and then boom, let's see what happens. U.S. stocks recoup $1 trillion in volume as coronavirus cases slow. So I don't know if you guys remember, but I remember distinctly around the end of the first week of April, everyone was getting slightly optimistic that coronavirus cases were slowing down. And you can see everything here is reflecting that. That massive S&P run was reflecting this. All you guys gotta understand. Markets are right now pricing in and have priced in coronavirus cases slowing down. So if there's ever a situation where coronavirus cases start to speed up, again, that's just one factor, then you will see a turnaround here. But that's not what we need. We don't need coronavirus cases to speed up. The market will invest and people will forget. It's quite interesting. People will literally put on a tremendous amount of capital. They'll put in this massive buy move here on the S&P 500 and they'll be long, right? But then they'll need new data and new data and new data to maintain those long positions. So we could even see that coronavirus cases are spiking again, but that might not actually drive markets sell side, right? It's quite interesting. So you don't want to make it's not cause and effect. It can be. All right. Brexit in many cases was that way. All right. But not all fundamentals are that way. This could be, but I don't want you guys to build a foundation on, okay, well, Cleveland said on April 6th, he showed us that markets ran that day. Well, if there's another spike in coronavirus cases, we should see a sell side move. It's plausible, but it's not necessary. Okay, so at the end of the day, I want to show you guys here that this entire up move has been merely based almost entirely off of news. Okay, yes, there was something that actually happened in the economy on March 24th in regards to the S&P 500 shooting to the upside because they actually passed the stimulus bill. Fantastic. But that sell side move temporarily happened because of the news that came out that, hey, they're expecting 100,000 to 200,000 deaths. But then the buy side move happened again because cases were slowing down. So at the end of the day, there's going to be this news coming out, and market participants aren't going to be so ferociously buying based on those catalysts anymore. The news releases are going to have to get bigger and bigger and bigger. Okay, so basically what I'm saying, they're going to have to be more impactful. So in the beginning, it's going to be easy to move the market, but at the end, it's going to be a little bit harder to move this market. Okay, so that's all I want to show you guys. Right now, we are holding these highs. And there's a quote that aligns very well to what's happening right now that every fundamental trader should know from the king of economics himself, John Keyes, Keynesian economics. He says the market can be irrational a lot longer than you can be solvent. Basically, the market can keep acting fairly silly. And while you think on your end, okay, the market needs to do this, it doesn't have to do anything. It can continue to make these massive runs in price without there being any real factual data behind it. that actually turns into true economics. It doesn't ever have to turn into true economics. It can go straight off of the rumor and still maintain those highs for a long time. That happened actually back when Trump was elected in the financial sector, but that's another story. So, all right, so guys, we're gonna be taking into account what's happening here at an extremely high level inside of the recession room. I wanted to give you guys a little bit of a briefing though, just so that you guys are at least up to date with what's happening. But if you want a little bit more detail and want to know the actionable plays to take advantage of this, head over to the recession room. Link for a free trial is in the description below. I want to know what you guys think of this. It's quite interesting stuff to me personally, and it's so amazing that you can actually factor in, you know, based off of what's happening in the actual news reports, you can see it inside of the actual price. All right, so it's true right now, fundamentals are driving price more than anything, and you have to be paying attention to it. All right, so guys, hope you guys enjoyed the video. If you liked the video, make sure you like the video for your boy. I very much appreciate it, and I'm excited for this. All right, let's see if we get this sell-off. I'm still waiting for it, but the market could break the high before we get the sell-off, dude. I mean, anything can freaking happen, so we just have to sit here and monitor it. We will see what happens. I hope it doesn't break this 3,000 level, but hey, anything can happen. We will see what happens. All right, let me know if you guys need anything. Comment below if you got any questions. Talk to you guys tomorrow. Peace out.